Welcome back to the channel, everybody. The system is rigged. And what I mean is they've rigged the banks to fail. That legacy system is what I'm talking about. They've rigged it to fail. I'm convinced of it. Look at all the information that has come out that we've covered. I showed you the documents where there's just things going on where either they were completely out of control, or they always knew this ending was coming and they wanted to milk that system and prep it for a collapsing, so to speak. That collapse they will profit from. That collapse will justify the implementation of the new financial system. Yesterday was massive news. Did you see that video from yesterday? If not, go check that out. And then also check out those postings I made last night in the members only section, right? Check out the post. Now we have this. Someone wants us to know, not the whole world, just researchers. Another thing that this tells me, don't worry, we're going to jump into this. Another thing that tells me is that, well, one, I noticed they've never released information like this widely on the banks and all of their problems before. One. So two, maybe it shows that they're done with the system. Three, they're prepping the minds of those of us who are taking it in, where when it happens, we'll understand. Like, okay, yeah, the banks went down. There was massive amount of banks swaying in the wind, contagion, and we know why. Look at this article here. I mean, after yesterday's news, this is unbelievable. Private loan credit ratings may be systematically inflated, warns the BIS. So it's serious business. Serious business. Let's go here, folks. So you have the commercial real estate problems going on. You have a liquidity problem. Apparently, according to the bank's words themselves, somewhere in the system, there's problems there. You have the stable coin, knife that's poking them in the side that can exacerbate bank runs at the press of a button anytime. And now you have this. The golden age for the bank coins is just that much closer. The door opens a little bit more. I mean, I'm trying my hardest not to say this is as close to a guarantee as anyone's ever going to get. They're going to hand that bank money over. That's the best I can say. With all of this evidence provided, how does they need liquidity? They need bridge currencies. They need transparency. They need traceability. Holy smokes, they got set up. They're going to hand that bank money over. There's no way that system continues in the capacity that it has, or it continues to be what people knew it to be. There's no way. All right, let's go here. So the article was tied. This is from the BIS once more. All right, so let's just go over a few facts before we move on to something else. It says here, the primary negative implications of this type of activity is a massive mispricing of risk in the financial system, leading to several detrimental effects. That system's coming down. New financial systems going up. Capital misallocation and poor investment decisions. Inflated ratings give investors such as insurance companies a false sense of security. That's just one example, right? They believe they are investing in safer, higher quality assets than they actually are. This can lead to misallocation of capital, funding risky ventures that should not have been financed or should have cost more to finance, and encourages poor, overly risky investment decisions by sophisticated players who rely on these ratings. What do you think happens when they find that out, or if the true value is ever exposed? What do you think is going to happen? Let's keep going. Right. See, you're smart. That's why I like you. You're smart. I know. We're here. We know. Systemic risk makes a lot of sense. With all that we've gathered and learned, it makes perfect sense why Christine Lagarde of the European Central Bank, ECB, who was, let's be clear about this, who was once the leader of the IMF. So she's very perspicacious. She knows a lot. Makes sense why she's for years been talking about contagion. Contagion within the banks. It's like the domino effect. One bank goes down, one financial institution goes down, and another goes down, and another, like dominoes falling. That is what contagion is. Systemic risk is the next one here. The widespread systemic nature of the inflation means that the risk isn't isolated. See, they said when, not if. When the true credit quality is eventually revealed, usually in a stress scenario. Really? That's the worst case scenario, is it not? It can trigger a cascade of losses. What do you think is going to happen if investors see that? Cascade of losses, lots of fear, the withdrawal of the investment. I would think, logically speaking, if not, correct me if I'm wrong, the withdrawal of the investment, which would then proliferate more panic because others would see that. Mainstream media would have to cover it. They did before, even though they did a little bit late. Is that not the recipe? Oh, let's not forget. Oh, yeah. Then people can, at the press of a button now, because they're instituting stablecoins, can pull their money out, their investment out with the press of a button. Of course, unless the systems are going to do what they typically do, which is freeze everything, which is not going to be good either. But nonetheless, correct me if I'm wrong, that's the makings of a bank run. I'm simply asking questions, folks. You tell me. I'm just asking questions. Golden age creaks a little bit more. The doorway opens a little bit more, doesn't it? Let's keep going. I mean, things are looking up for bank coin holders. In my humble opinion, it's not financial advice, just my humble opinion. All right. I only speak for me, not trying to convince you of anything. So now I just present you my ideas. What you do with them is up to you. So now, regulatory arbitrage. Financial institutions, particularly banks, are often required by regulations like the Basel Accords to hold less capital against assets with higher credit ratings. Inflated ratings allow institutions to reduce their risk-weighted assets and hold less capital than they should, which erodes their safety buffers and increases their vulnerability. That's another thing. They're going to want that transparency that DLT brings. Everything will need to be verified, proven, doubly. They set that legacy. The legacy system they've been set up. You tell me, you think they've been set up or not? You think they were just so wildly reckless? Aren't they supposed to, allegedly, according to everybody in the regular world, because I've spoken to many people, aren't the banks supposed to be filled with the best and the most brilliant at the top? You believe that? Are any of these institutions, like you were in a lot of the high intellectual classes throughout your schooling, high school, college, etc., right? Do you see any of those types of individuals running everything? Now, they may run their own business. I find that a lot of intellectual people tend to work for themselves, run their own business. They don't typically run all of these governmental offices, banks, etc. I just have not seen that. I mean, no disrespect. But you tell me. So they don't make the best decisions is what I'm trying to go toward. So now let's scroll down here. Effect on liquidity. Is there an effect here? Yeah, let's see. Initially, inflated ratings can make the private loan seem highly marketable, temporarily boosting liquidity. We're going to get back to that illusion again. How many illusions are in this system? There appears to be liquidity in all these places, but it's not real. My humble opinion. Let's keep going. Let's see what they say. Let's read what they have to present. Temporarily boosting liquidity by making it easier to sell the asset to a wide range of investors. So you're cheating. Let's keep going. You're cheating. You're rigging it. You're lying. Unbelievable. This is who they tell the people to trust, these banks. Hence why everyone that is erudite is going towards gold to protect their value. They don't trust the banks. I mean, listen, just my humble opinion from my observation. Just ask that question and then look into that if you get a chance. Why is everyone running towards gold to protect their value? They're not leaving them in banks. Why? Even the bank is protecting the value. Why would the banks need to protect the value that they put out there, that they produce? Even they know, not even they know there's a problem within their own system, and they have to protect themselves from it. Hence the historically high price of gold. And this is what we understood back then about gold, back when gold was a super low price years ago. Go look at the price of gold 3 years ago. Look at the price of gold today. Then look at the predictions from the big companies and the big banks about where gold's going to go. Now you're seeing $5,000 predictions. There's a reason why. I like that. I thought that was interesting. Why? I entertain myself. I keep myself entertained. That's part of just being self-sufficient, right? So now, when the true risk, wait, making it easier to sell to a asset to a wide range of investors. However, this is a dangerous illusion when the true risk is exposed, e.g., a wave of defaults. Investors lose all confidence in the ratings and the underlying systems. The resulting information uncertainty. Oh, wait, my apologies. I had to do a double take on that. The resulting information uncertainty causes a flight to safety, flight. Thank you, BIS. Thank you for this information. Who's been pulling the BIS's strings and telling them, hey, listen, for a while this has been happening. Someone pulled their strings. And I think I know who. If you pay attention, I think I know who is doing that. Causes a flight to safety, and trading in the misrated loans freezes. No one wants to buy an asset when its actual value is unknown and likely far lower than its rated value. Fire sales. When's the last time we heard that? What did you say? No, keep talking. I think you were right. I heard something. Right. Last time we were hearing about fire sales and all that was when those banks collapsed. Right. I like you. You're smart. Don't let anybody tell you different. Somebody tells you you're not as bright as you think you are. Sorry about that. You're not smart. Something like that. You tell them Mick said I am. And Mick stands on that. Not going to back me down. I know what I know. You're smart. I'm smart as well. We're wise. So now, in a crisis, investors may face large, sudden redemption requests. What does that sound like? What do you think that's going to do? Forcing them to quickly sell or have their funds sell assets to raise cash. If the private loan market is illiquid, you need something to provide liquidity. A liquidity cushion. We heard an expert use that word. I've been using that word for years. We read a document like maybe last week, I believe it was, where they're using my term liquidity cushion. What provides the biggest liquidity cushion of all time? What can generate that liquidity cushion? What are they accumulating massive amounts of in treasuries? What? No. What? Huh? XRP, Solana treasuries, Chainlink, Bitcoin. People don't understand what's about to happen. Boom! They don't understand what's about to happen. I don't need them to. You don't need them to. But this is an observation. Because those very same people will go against you and tell you that you don't see what you've been observing through hardcore research, even though they've done no research whatsoever. So it's just something that I have noticed. Now, are there guarantees here? No, life is not a guarantee. There's no guarantees in anything, but there is a high likelihood of certain things. If there's ice outside my door and I step out, I step out without salting the ice first. There's a high likelihood I may slip. Oh, my word. Let's keep going. If the private loan market is illiquid, these assets must be sold at drastically reduced prices known as fire sales. This price decline further harms the balance sheets of other institutions holding the same assets, spreading and deepening the crisis. What happens when if the public learns of such activities ever? You tell me. I could be wrong. I'm always willing to learn. I'm learning every single day. I'm trying to advance myself. That's how advancement works. You humble yourself in order to learn from something or someone who is greater than thee. Yeah, I didn't say greater than you. I like to say, I like to mix things up. I like to keep it interesting. Not you today's thee. Thee. Why? Because it's cool. Well, my who said it's cool? Because I said it's cool. No one should ever tell you or dictate to you your own perspective based on your perceptions. Boom. Let's keep going. Hence, we are sovereign beings. We should be. Distributed ledger. Well, I shouldn't say we should be. I don't know what you should be. But I think and do for myself. No one controls me. There's no strings. I got no strings to hold me down. Remember that song from Pinocchio? I got it right today. Oh, yes. People let me know. Oh, my word. I said that song the other day was from, I think, Little Mermaid or something like that, which I even struggled. You can see I struggled just to remember what movie that was. It's not that serious, but it was from Aladdin. Oh, my word. People in real life, they really, really let me know. Holy smokes. They were waiting for me to be wrong on something. Oh, man, you got it wrong. It wasn't that. It was Aladdin. It wasn't. That's the part that you, all I said in the video, that's what you got stuck on. All right. Anyway, that's what you want to get on me about. Okay. I'll accept it. So be it. All right. I was wrong. Anyway. So of course, DLT solves this. XRPL solved this. They're out the forefront. Enhanced data transparency and accessibility, improved auditing and verification. That's what we do. Liquidity cushion. I just mentioned that. Decentralized rating mechanisms. Folks. So now I wanted to do a little bit of searching into the next thought I would have, which was like, wait a minute, doesn't this exacerbate? And I've been sort of seeding the video with this idea that exacerbates and can cause, in my humble opinion, maybe I'm wrong, bank runs. That's all the makings. That's all the seeds for bank runs. All right. So then, of course, we have to look into contagion, etc. And here's a few things that I pulled up about contagion. Number one, the inflated ratings cause a massive hidden buildup of risk in non-banking financial institutions. So the banks and NBFIs, as we've been learning lately, are 100% tied in together, right? And I'm not talking about the NBFIs they're competing against. I'm talking about legacy system NBFIs that work with them and they take loans from them, etc. So there's that. So let's say they're pulling a lot of liquidity from the credit that they've been promised by the banks in order to deal with this particular problem. Should this problem accelerate at any point and become hazardous to them, that liquidity, obviously the liquidity of the banks lowers greatly. That might have been a little bit of a non-eloquent way to put that, but I think you get the point, right? So I just wanted to say that as they're talking about NBFIs here, a sharp economic downturn or an unexpected default, a trigger event is what they're calling it, exposes the true low quality of the misrated loans. Next one, the assets held by NBFIs suffer a steep, sudden, quote, market-to-market decline, fire sale risk, leading to large losses for the NBFIs. To cover losses or meet investor withdrawals, the NBFIs simultaneously withdraw heavily on the committed credit lines from the banks. That's what I was just talking about. I mean, it's the only reasonable thing. It's the only reasonable conclusion. So then one has to ask, and I don't know if we're going to get time to jump into this here. One has to ask, if they're going to draw heavily on the liquidity of the banks that are already struggling in a myriad of ways, how does that affect the banks? Let's keep going. So heavily on the committed credit lines from the banks. Next one, this massive synchronized drain on bank liquidity. I'm so glad they went this route. So that way, maybe that makes a little bit more clear what I'm trying to convey. So drain on bank liquidity and capital is the indirect shock that can destabilize the banking sector. And with all of these things we've been covering, they're sprinkling in stable coins that are not stable. Now we understand a little bit more clearly why the Bank of England said, no. Stable coins, I will have none of that. No, I shall have a bit of tokenization on this good day, sir. I just messed that up. I was trying to do some sort of English accent. I know I have a lot of really, really great English subscribers out there. I know I did a terrible job. My apologies. And then I mixed it with like a Western accent. Maybe it was a little entertaining though. But so indirect shock, folks, why is this happening? Can you just tell me, what's your opinion? Why is this happening? Then on top of that, do you believe they rigged this? There's no way they're this incompetent, or do you believe they're just that incompetent? How do the people that are running, maybe it's corruption, possibly as well. Either way, they have set up the new financial system beautifully. And I firmly believe that now, see, I have to explain this aspect as well. When you have companies like Ripple with people like David Schwartz, you have companies like Hedera, HBAR, with people like Lehman Bear. These are legit brilliant people. I don't say that lightly. Very high IQ individuals, right? They're able to see, a lot of high IQ individuals are able to see things before they happen. They have next level foresight. And because of that next level foresight, they're able to prognosticate things that should happen and things that may likely happen and then capitalize on that. And that's what they did, in my humble opinion. They saw the weakness, and they saw the weaknesses in the system and took advantage of it, building for years and years and years, knowing that there was this inexorable point that would be reached. And here we are today. We're coming into that energy today. And it's very interesting. I believe that David Schwartz did an interview a long time ago that sort of iterated what I'm saying. Now, he was more heavily talking about Bitcoin, think this way. In that interview, he was saying something akin to, he saw the weaknesses or something like that in Bitcoin, and with XRP, I guess he and others possibly created a better Bitcoin, and that's what XRP was meant to be, right? A better Bitcoin, as well as it's like a Bitcoin made for banks. That's what XRP is. If he did that with Bitcoin, you don't believe that he also very easily, possibly, saw the weaknesses in the legacy financial system and said, oh, let's take advantage of that. If not, let me not move my microphone too much. I hope that is recording well today. There's no problems with YouTube. If not, why would he also make it where the XRPL and XRP lean heavily towards the banks? They are bank coins. Why? You ever ask yourself that question? It's been a setup from the beginning. I'm trying to think of a way to put this. It's as if these brilliant people are taking advantage of minds in the legacy financial system that have been dulled with corruption. Corruption dulls you. It just takes everything out of you. And it fills you with an arrogance that allows you to make mistakes, and you never interrupt your enemy when they're making mistakes. All right, so now we have that here. Okay, that's major. That's a bombshell. And that's something that's been kept secret. Who before the BIS highlights something like this? Who knows the intricacies of things like this? Let's move on to a little bit of Bitcoin news, because Bitcoin was looking pretty good last time I saw. I thought it was showing good resilience, as I knew it would. So let's cover a little bit of Bitcoin here to end off the video. So now, this article is titled "Crypto Stocks Climb Alongside Bitcoin and NASDAQ on Chinese trade talk optimism. Okay. Robinhood was leading among the exchanges, and Bitcoin was higher by 10% after adding to its Bitcoin stack. All right, let's go here. Let's scroll down past the ad. That's what I'm doing. That's why sometimes I pause a little bit there. Crypto-related stocks gained ground on Monday. Because I guess the U.S. is having, it says U.S.-China trade talks. All right. Well, what came out of it? Did something come out of it? Exchange for easing the 100%. Oh, okay. So U.S. wants China to continue to supply the U.S. with rare earth magnets. Magnets or minerals? All right. They're saying magnets. A critical component in everything from electric vehicles to smartphones in exchange for easing the 100% tariff threat announced earlier this month. Okay. All right. This followed similar positive weekend comments by Treasury Secretary Scott Bessent, which sent Bitcoin surging as high as $116,200 on Sunday before a modest pullback to the current $115,000 at the time of this article. Among those gains on Monday were Robinhood. I'm not concerned with that, so I'm going to skip over that part respectfully, okay? I'm not concerned with any Robinhood, anything. I stay focused, all right? At least I attempt my best to stay focused. All right, so Bitcoin is looking good. Bitcoin is looking good, looking solid resilience. The rally also comes as traders brace for the Federal Reserve's upcoming policy decision. The central bank is widely expected to lower its benchmark interest rate by 25 basis points, a move that would lower borrowing costs and potentially fuel more risk taking in assets like cryptocurrencies and tech stocks. I'll take it. Wherever the positive catalysts come from, I'll take it. And that's just sprinkles on top of an already delicious cake. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.